Well, the global telecoms market faces big challenges and opportunities due to changing demands from customers, new developments in technology and the impact of last year's recession. That's the view of PricewaterhouseCoopers. And joining me to chat about this are Colin Brereton. He's the global leader for communications industry. Johan from Huysteen, Southern African leader for communications at PwC as well. Gents, thanks very much for coming in. Short notice. Colin, I'll start with you. What are the challenges and opportunities that have opened up for communications players in this market?
Well, there's a range of opportunities from the market side, particularly emerging markets, which are driving really all the growth in the industry at the moment. Changed customer behaviours and lifestyles driven by smartphone devices and broadband applications. Changing regulation, which is driving down prices and making telecoms more accessible to people. Consolidation within the industry, allowing people to scale up, and the sustainability green agenda, which obviously in South Africa is getting a lot of comment at the moment through King 3.
Yeah, and how does South Africa fit into this picture? Of course, we have quite a few big telecoms players in the market. Cost is not something that's coming down very fast in this market, and it's something that's criticised often. And we do know that telecoms costs are much cheaper in other comparable countries, aren't they?
Well, if you look at the South African landscape, I guess the most recent changes with the drop in the mobile termination rates with effect from 1 March. And that has brought down the termination rates to some extent. And of course, some of those savings have been flowing through to industry. I guess if you look at the landscape in South Africa in terms of opportunities, yes, there are still opportunities, although we're looking at a saturated market. I think penetration levels in South Africa reaching 105%. So of course the play is definitely to branch out into different services, and that's what we've seen the operators do. You know, I think with the introduction of broadband, with the landing of the CCOM cable, etc., I think it does open up the broadband space. It does open up a lower cost regime, and I think it does open up definitely some exciting opportunities in the South African market as well.
Are we keeping pace though with our global counterparts?
I think if you look at it, and Colin, you can comment in terms from a global perspective, but I think this, you know, the drop in mobile termination rates has been coming. It's been coming for some time. A lot of criticism from an industry perspective. I think there's both sides, two sides of the story. You know, first of all, if you start dropping termination rates, of course, you would have less funding coming into the operators, and that would also, to some extent, reduce some of the infrastructure spending, etc., that needs to address things like quality in the market. So in terms of the South African space, I think the good thing is that we are progressing, and we have seen some change in that respect. But Colin, you can maybe just comment from a global perspective.
Well, I think that's right. I mean, what's happened in the South African market in 5 years really took 15 to 20 years elsewhere in the world. There's a lot of competition that's been introduced into the South African market recently, and saturation rates are high. It's 105.5% at the moment in South Africa, which is good news, but I think is going to create some challenges around network resilience, contention rates, etc. It'll be interesting to see during the World Cup how the networks hold up to the increased demand.
Any idea of how they are going to hold up during that increased demand period?
Well, I think what we've seen in the markets is the operators have actually been spending a lot of capex in terms of building the infrastructure. I mean, they've been aware of the World Cup coming, so I think that they, as part of their plans, have been ramping up for the event. So I would hope that, you know, that the capacity has been built to be able to provide the service during the time of the World Cup.
Colin, just looking at the recession last year, do you think that cell phone operators globally took that time as an opportunity to prepare for the growth that we're starting to see coming through now?
Yes, very definitely. The recession was a time when operators were able to retool, regroup, focus on their cost base, cut debt, cut capex, and really drive efficiency through their business. So I think they're now well positioned to take advantage of the demand, which has been driven by improvement in the global economy as well as changed lifestyles.
How about consolidation? Because that's something you also see during a period of recession. We did see MTN trying to merge with Bharti last year. That didn't happen. Bharti's now tied up with Zain. Do you see more consolidation in the market locally, Johan, and internationally, Colin?
I think first of all, if you just look at the space in the developed markets, of course the opportunities are becoming less in terms of licenses availability, in terms of being the second or third entrant into a market. So of course you've got the developed markets focusing very much on getting into the emerging markets. So in terms of consolidation, we would see that happening, and because of the limited amount of licenses available, of course, you know, consolidation would probably happen in terms of acquisitions or M&A activity. But that being said, I think it's important that when we talk about consolidation in an industry, it's not necessarily only about M&A activity, it's also about partnering. And if we look at the trends that's happening, and you know, the handset device actually being an enabler to various other things. You know, we would also see some partnering coming through, like for instance the operators with the banks. We've seen some of that in South Africa, and I think further north into the rest of Africa, you know, that's where the opportunities lie. So consolidation is just not about M&A; it's also about partnering with
and in
right
developed
players.
countries.
In developed countries, absolutely. The markets are very, very crowded. There's not enough margin to go around, so you're going to have to get consolidation. Also, to move into new areas, particularly around sort of e-health, mobile commerce, education, is going to require scale, which will also drive further